everyone, welcome to Business at 9. I'm Shibani Gharat and joining us in studio is my colleague Jude Sanit. Now let's go over to Wall Street. Time for an update on how US indices are performing this Wednesday. The S&P 500 gained 0.5%, while the Nasdaq Composite added a 0.7%. The Dow Jones Industrial Average 0.6%. Gains have been led by major technology stocks as traders reacted to more data showing inflation is cooling. While equities were higher, gains were limited as crude prices perked up. That's after the U.S. Central Command said the U.S. launched more attacks against Iran. West Texas intermediate futures were up 1% at above $80 per barrel. International Brent gained 0.6% to trade above $85 per barrel.
Meanwhile, PayPal shares surged more than 16% after reports that payments giant Stripe and private equity firm Advent International have jointly made a $53 billion buyout offer for the company. Now, the proposal values PayPal at about $60.5 to the share, representing a 28% premium to its previous closing price. The deal is reportedly backed by $50 billion in committed financing and would create one of the world's largest digital payment platforms if it does go through. PayPal has not yet responded to the offer.
Now, on the day of the India-UK CETA has come into effect. ET now spoke to Commerce Secretary Rajesh Aggarwal on the deal and the impact it will have on the Indian economy and trade. Let's listen into the exclusive conversation.
I think for businesses, many areas which they were exporting to UK, the duties go down. 99% of the tariff lines in UK now do go down to zero for India. So that means all our textiles, all our leather, footwear, apparel, agriculture goods go down to zero duty, and that's a big win for our Indian industry. And Indian industry which are already present in UK market should be able to take good advantage of it, and new industry, new startups, new MSMEs should also be able to leverage it. For consumers also this means good quality products, technology products, products which we are dependent on UK for import. Those products can come out cheaper and that will be available in the market for them cheaper. Cars has been a good aspiration. I think many Indians on the who meet me about India-UK CETA keep me asking when the cars will start coming in. Absolutely. Because the aspirational India look for a different quality, different types of cars, and that is also something that they will get in equal measure. So I think it is a win-win from both consumer perspective and also from a very business perspective, which opens up big doors and big opportunities for them.
Right. So very rightly said that it is definitely a balanced trade agreement, like you've said in many of your press conferences. Since you spoke about autos, let me ask you, when do the first set of cars arrive on India's shores? And second part to my question with respect to autos is the fact that you have brought in a tapered form of quota system and EVs only start after year 5. What's been the rationale and thinking behind that?
One, auto sector is one which we have not opened up much in the past. This time it has been a calibrated opening up. It has been a quota-based opening up, wherein if you look at the opening up is more, the quotas are more in the high-end car, the costliest car, which are not the segments where we produce more. So those are the areas we have brought down duties and enabled cars from UK to come in. The EVs is a developing industry in India. It's expanding fast, but we thought it needed some time to settle down before being opened up to some foreign competition. So the quotas in EV trickle after 5 years, but all these quotas go on and taper down to the 14th to 15th year, and we are looking at a good duty out of quota, and we feel with this some element of competition on the fringes, our industry will also come of age and it will be good for our consumers.
Absolutely. Sir, you have also mentioned in, your past briefings about, how this got wrapped up in 30 days. And of course, on the morning of 17th June is when these negotiations completed. But let me also ask you about steel quotas that the UK had brought in. How was the conversation on that front? Because that was a concern on India's side. On CBAM as well, what are the assurances that you've been given by the UK side on those front? And how did rebalancing in this pact happen?
Thank you. I think you are aware this agreement was finalized last April and it was signed in July 2025. After that, we have been working towards operationalizing the same. The steel safeguards came in between. So the idea was whether to reopen the trade agreement or try to find solutions outside the agreement. I think both sides showed a lot of maturity and trust, and we have been able to find solution outside the agreement by way of increasing. The UK side has increased quota for India, accommodating some of the demands of our industry and ensuring that our exports in those lines where quotas have come are not only able to maintain that export level, but we are able to grow also in those areas to some extent. And at the same time, I think they also brought in certain concessions on the double convention contribution, so that that takes care of our limitations under the steel safeguard. So I think it has been a very even-handed discussions between the two sides, and I think we have been able to arrive at the ministerial level a good outcome under this discussions.
Right. So since you mentioned about the double contribution convention, which is being touted as one of India's biggest wins, given the fact that the year, 3 years is now extended to 5 years, of course, very liberalized agreement in terms of services as well. 134 subsectors, if I'm correct. 137 sectors, are under the services agreement. So what sort of boost in exports do you wish to see as far as the services sector is concerned? And double contribution convention, any particular sectors that are slated to win, poised to win, besides, of course, IT?
I think double contribution convention will help all our professional services, because professionals normally go for temporary work. They go for 6 months, 1 year, 5 years, and they were subjected to 20 to 23% of social security contributions, which was like a sunk cost for them. They would not get any commensurate benefit out of it. But now under this DCC agreement, they will be able to contribute the similar amount in their social security account in India and be exempted from doing so in UK. That will be a big win for all our professionals. That will make them competitive, and that will ensure that professional services, UK is a big market. It imports more than $100 billion of professional services. So it will be a big opportunity for our professionals in UK.
Absolutely, and that remains to be seen how that really plays out, this complementarity that you talk about. But sir, is this going to be a template for other FTAs that are currently in the works that will be negotiated in future? Because you have said that this is one of the most ambitious agreements that we've entered into.
See, every agreement stands on its own strengths. So this definitely, there will be learnings from this agreement also, which will have some shadow on other agreements. But every agreement has to find its own balance. It will depend on the strengths of each other partner countries and the unique strengths that both countries are able to bring to the table. So I feel there will be some elements of this you will find in across other agreements also. But I think every agreement in its own way will be unique, measured, and a very good balance between the strengths and sensitivities of both sides.
Absolutely, and when you talk about sensitivities, that of course is the biggest factor in this agreement and several others that we have signed as well, that the UK side has kept our sensitivities in mind as well, and those sectors remain out. So overall, what's the kind of boost to exports that you see to the UK as a geography, and the trade sort of expansion that you see?
I think there is a bilateral trade expansion that we see, and we are expecting that by 2030 we should be able to move from $60 billion to $100 billion. In addition to that, in addition to the bilateral trade, I also think when the two economies combine and their businesses integration take place, there is spin-off in other economies also, because together we can create products which will be good for other markets also. So there are spin-offs which cannot be completely counted towards the bilateral trade, but that will also help India become better participant in the GVCs and create more supply chains to different parts of the world.
Moving on to action from geopolitics next, the United States Central Command has confirmed that it completed a morning round of strikes against Iran. In fact, CENTCOM launched precision munitions against coastal defense systems and cruise missile storage, and launched sites on Greater Tunb Island during the 90-minute wave of attacks waged by the US. In fact, American forces have also said that since restarting the naval blockade against Iranian ports 17 hours ago, American forces also redirected 2 commercial vessels attempting to run the blockade. Srinjoy gets us more details from the offensive.
As far as the war goes, things are almost back to square one, because the Americans have decided that since Iran has shut down the Strait of Hormuz and fired at a variety of ships in these recent few days, America is going to hit back. And American strikes have already begun. Many of them have been on military targets, and these have largely been in southern Iran, around the coast of Iran, close to the Persian Gulf. Now the question is that while there are still talks going, the President of the United States, Donald Trump himself, has said that the ceasefire is virtually dead. So if that is so, it's very difficult to see how the ceasefire can happen again, how peace can return to this war-torn area, because this could get much worse, much, much worse. And regrettably, it's not just about Iran and America. The Gulf states will suffer. And equally importantly, it must be said, the world will suffer, because if 20% of the world's energy goes through the Strait of Hormuz, then many big Asian countries, Japan, China, India, of course, and South Korea will suffer. And let's not forget, most importantly, the deaths of Indian sailors. Already there have been deaths. India has protested. The worry is it could happen again.
Now, moving on, in some positive signs for the U.S. economy, producer prices unexpectedly fell in June, marking the biggest monthly decline in over a year and coming in below the market expectations. Wholesale good prices saw a sharp decline, a sharp correction led by lower energy product costs. The softer than expected inflation print has reinforced expectations that the U.S. Fed may have room to keep interest rates unchanged in the near term.
Meanwhile, Federal Reserve Chairman Kevin Walsh is testifying before the Senate Banking Committee, facing questions over the economy and how various factors might impact interest rates. Let's listen into what he had to say.
The star by which we steer by. And if we get policy right, and we will, the inflation surge of the last 5 years will be a thing of the past. Just a month ago, I chaired my very first FOMC meeting. My colleagues and I recognize that high inflation has been an undue burden on American households and businesses. And while monthly fluctuations are inevitable, especially in an unsettled world, underlying inflation over longer-term horizons is determined largely by monetary policy. As I've said before and will say today, inflation is a choice.
Now, India's external balance shows signs of weakness as per the latest RBI data. Current account deficit stood at $2 billion in May, reversing the $0.7 billion surplus recorded in the same month a year earlier. Moreover, the balance of payments slipped into $4.4 billion deficit compared to a surplus of $4.4 billion last year. Darshita gets us more details on this.
Right. India's external sector showed signs of pressure in the latest RBI data. The current account slipped into a $2 billion deficit compared to a $0.7 billion surplus in the same period last year. Simply putting it out, India spent more on imports, services and overseas payment than it earned from exports and foreign receipts. At the same time, the net foreign direct investments turned negative with a $100 million outflow versus a $900 million inflow a year ago. This means that the foreign companies took out more capital than they brought into India during the month. And there was also pressure from the markets. Net portfolio flows recorded a $4.7 billion outflow compared with a $1.3 billion inflow last year, indicating that foreign investors were net sellers of Indian equities and debt. And as a result, the balance of payments swung to $4.4 billion deficit from a $4.4 billion surplus a year ago. In simple terms, India's overall foreign exchange inflows were lower than its outflows during the month. So the RBI data points to a month where both trade and capital flows came under pressure, leading to a weaker external sector position.
Meanwhile, the Union Cabinet has greenlit key projects in its weekly meeting. That Cabinet has in fact approved the second edition of the India Semiconductor Mission with an outlay of 1.27 lakh crore rupees. The new edition of the Semiconductor program has provisions to incentivize even suppliers of raw material in the chip manufacturing industry, including minerals and gases. The Cabinet also approved 62,500 crore rupees for the second edition of the mobile phone production linked incentive scheme. Let's listen in to what Union Minister of IT Ashwini Vaishnaw had to say.
Semicon 2.0 1,27,500 करोड़ रुपए का सेमिकॉन 2.0 आज माननीय प्रधानमंत्री जी ने अप्रूव किया। हम सब जानते हैं कि सेमीकंडक्टर इंडस्ट्री एक फाउंडेशनल इंडस्ट्री है जो कि आज जितनी भी मैन्युफैक्चरिंग होती है, चाहे आपके हाथ में जो मोबाइल फोन है, जो कैमरा है, घर में फ्रिज, टीवी, एसी, स्कूटी, कार, ट्रेन, चाहे मिसाइल्स हो, कुछ भी हो, सब में सेमीकंडक्टर चिप्स लगती है। इसके लिए आज और इलेक्ट्रॉनिक्स अपने आप में बहुत ही एक बड़ा फैक्टर बन के उभरा है, तो इलेक्ट्रॉनिक्स की अब पूरी चेन, वैल्यू चेन अब कवर हो गई।
Now, my colleague Prakash gets us a roundup of the cabinet decisions.
Well, it's a confirmation of our news break as the Union Cabinet has approved India Semiconductor Mission 2.0 with an objective to develop entire semiconductor ecosystem. In fact, a comprehensive scheme has been accepted by the Indian Cabinet with an outlay of rupees 1,27,000 crore. Additional incentives would be provided to increase manufacturing capacity going ahead. In fact, the government is expecting to receive approximately 4 lakh crore investment in next few years. In addition to that, the Cabinet has also given its go-ahead for mobile phone manufacturing scheme with an outlay of rupees 62,500 crore. In fact, additional incentives would be provided for research and development projects along with design initiatives. In fact, the government is intending to develop India brands going ahead, a very significant development. Along with that, the Indian Cabinet has also accepted a scheme for urea production in the country. In fact, the government is planning to become Atmanirbhar in urea production, and therefore, new urea investment policy 2026 has been accepted by the Indian Cabinet. In fact, the government will be setting up 8 new manufacturing plants under this scheme, and the financial incentives will be provided based on natural gas prices. A very significant development. Along with that, rupees 25,000 crore has also been accepted by the Indian Cabinet for the construction of 2 national highways, especially to connect Varanasi.
Railway multi-tracking projects covering 4 districts in Odisha, Jharkhand, and the government also announced a new national investment policy for urea. Darshita gets us a roundup of the sectors and the stocks this will impact.
Right, the government's latest cabinet decisions are also expected to create fresh opportunities for infrastructure and fertilizer-linked companies. Let's start off with infrastructure space first, with approvals for new highway projects and the Varanasi-Dangopusi-Rajkharsavan rail line. Companies involved in EPC and infrastructure construction could see fresh order inflows. L&T, which is Larsen & Toubro, is one of the biggest beneficiaries to watch, given its strong execution capabilities across roads, railways, and large infrastructure projects. Road-focused players like KNR Construction, Ashoka Buildcon, and AG Infra Engineering could also be in focus as bidding activity picks up. NCC may benefit from the higher opportunities across highways, elevated corridors and the urban infrastructure, while KC International could gain from transport projects including railways and associated electrification works. Now focusing on the railway side, Rail Vikas Nigam, Ircon International and Texmaco Rail and Engineering are expected to remain on investors' radar as rail infrastructure spending gathers pace. Now moving on to the fertilizer space, where the cabinet has approved the extension of the urea subsidy, which is positive for the fertilizer companies as it improves the earnings visibility and supports the cash flows. Companies like National Fertilizers, Rashtriya Chemicals and Fertilizers, Chambal Fertilizers, Gujarat State Fertilizers and Chemicals, and Coromandel International could all benefit from the continuation of the subsidy regime. Addition to that, the national investment policy from urea could drive fresh investments into domestic fertilizer capacity. Now that puts Engineers India in focus for consultancy and the project management opportunities, while L&T could also benefit from EPC contracts for upcoming urea projects. So overall, the cabinet announcements are seen as a strong positive for roads, railways, electronics, manufacturers and semiconductor companies, while fertilizer companies and EPC contractors linked to the new urea investments could also see a meaningful over the medium term projects.
Right, Darshita, thank you so much for taking us through this. Now, moving on, it's an exciting week for all the football lovers. Now, Spain has become the first ever finalist of the FIFA Football World Cup 2026 after a commanding 2-0 victory over France in the opening semi-final, led by the brilliant Lamine Yamal. La Roja, in fact, produced a composed and clinical display to book their place in the final. Now, all eyes will be on the second semi-final, where Argentina will take on England tonight. My colleague Shaurya Londe explains the details.
Yes, and the first semi-final of the FIFA World Cup is done and Spain have dominated the game. 2-0 victory over France, and France felt like they had no answers to the Spain team. But scoreline tells you half of the story. Spain controlled the game and dictated the midfield and the tempo and never allowed France to settle. The possession was almost 51-49, but Spain were far better with their ball. If we can look at the stats on the table, let's check out the stats. So it is 51-49 Spain's possession, but the passes that they played were totally better than France's. 87% pass accuracy to 86, and shots on target would be 2 compared to 4 of France, but the 2 targets were the crucial goals that Spain had. So, talking about the next game, it is going to be a big clash, and the winner will face Spain in the final. And the match is going to be between Argentina and England. Interestingly, these two teams have dominated this tournament. They have not lost a single game, though England has a draw. They've played 6 games, 5 wins for England, 6 for Argentina, 13 goals for England and 17 goals for Argentina. So even competition it is going to be, but the contributors for these goals are Jude Bellingham and Lionel Messi, and that is the battles of number 10 that we have to watch out for. So talking about these two players, quite even on the go sheet with 8 goals for Lionel Messi. He's currently topping the Golden Boot charts, and 6 for Jude Bellingham. Assist, there are 2 for Lionel Messi and 1 for Jude Bellingham, but the main thing and the most important data that we have to check into is going to be pass accuracy. 82.4 for Lionel Messi and 81.7 for Jude Bellingham. So quite a battle it is going to be in the semi-finals, and the road to the finals of FIFA World Cup 2026 is set.
And for the FIFA World Cup trivia of the day, here's a world record that's stood the test of time. Back in 2002, Turkey's Hakan Şükür stunned South Korea by scoring just 11 seconds after kickoff began, thereby scoring the fastest goal in FIFA World Cup history. More than 2 decades later, no player has managed to break that incredible record. And before we leave, don't miss Football and Fortune, ET Now's special on the FIFA World Cup 2026. As the tournament builds towards its grand finale, we go beyond the action on the pitch to decode the business of football, from billion-dollar revenues and sponsorships to the global economic impact of the world's biggest sporting event. So catch Football and Fortune on July 17th at 9 p.m. only on ET Now.
Well, with that, it's a wrap on this edition of Business at 9. Goodbye from me, Shibani Gharat and Jude Sanid. Bye-bye. Have a wonderful evening.